have good old Stilios with us today. He's got a meeting, an appointment, but I know the K-Man is here. Morning, K.
Good morning, Ryan. Good morning, all.
How you doing, mate? All right?
Yeah, good.
Bit of quite a week this week so far.
Yeah, it's a bit of a quiet morning. Got the impression that end of month, end of quarter may have started on the euro side of things. If you look at how euro dollar is holding up, but the rest of the dollars rather getting back a little bit of their mojo, and I don't know. Looks like we may have entered finally the end of month, quarter.
Yeah, looking that way. Keep an eye on those hourlies.
Yeah,
Clock,
we'll talk about
for the fixes
in a minute after you've done the little roundup.
Yeah. Well, we should start the roundup over in Japan, and PM Kishida says that Japan's financial system remains stable overall, but is closely watching developments in banks, seeing risk aversion in financial markets, but Japan's financial institutions have ample liquidity and capital. Parliament also passed the budget for fiscal year 2023, a record 114 trillion yen in that one. Suzuki said that the cabinet approved the use of 2.2 trillion yen in reserve funds, and some of that is going to be used for further price relief measures, among other things. So big spending over in Japan. Kuroda was out as well, saying that sustainable inflation target is still not met yet, and it's premature to debate an exit from easy policy as more time is needed. No real change there from him. Looking at some of the data, not a lot out overnight. Aussie retail sales, let's get rid of that clown. Aussie retail sales, where are they gone? They were here, maybe they're in today's stuff. There we go. Aussie retail sales up a whopping 0.2%, beating the whopping expected 0.1%. Plus is a plus in this day and age, and no one's worrying about that. Japanese core inflation there, the BOJ measure, coming in at 2.7. So obviously not as much as expected. Was expected to rise on last month, but it hasn't. It's missed that, and it's coming lower than last month as well. Surprisingly, we're not seeing that reflected in prices, Kay. Didn't see much happening in dollar yen overnight. Are we to be worried about that dip in inflation? We've seen it obviously in the other main numbers, but we're not getting the easing reaction we would in yen.
Yeah, but it's what both Kuroda and Ueda had been hinting at, right? That the stuff was gonna come down. I don't think, unless this thing goes back below 2%, Ueda may still take the opportunity to shift stuff around a little bit, and I think that we have to expect some stuff, and I've been saying that repeatedly. Unless it really starts to get back below 2%. Yeah, we know that with energy coming off, those numbers, well, the core is without energy, but we know that historically the Japanese companies have a lot of trouble to pass on price hikes to the customer, and also those stimulus packages are probably helping them not to have to pass those price hikes in full. So and I don't know whether it's worrying yet. We have to take note of it going down, but to really say the party is over and they've completely missed their window, this has to go back below 2, right?
Yeah, but it doesn't seem we even get as much as an algo blip on this data, even as much as it was expected. That's a thing that's striking me. You know, you expect maybe a 30-40 pip bounce in yen pairs just on the print, but we're not even getting anything like that at the moment. So it will maybe bigger fish to fry elsewhere, perhaps.
Well, it did jump. Dollar yen jumped just a tad on the European Open, right? So this number came out around 6 a.m. our time also, and we did have a 50-60 points move on the back of it, right? It came out much later than they usually do.
Oh, I thought it came out overnight. Okay, yeah, I see.
No, it came out early morning, so we did have the blip higher, right?
Oh yeah, might have been a bit late. Yeah, 5 o'clock it came out, which would have been about there.
5 or 6, yeah, somewhere around there, mate. Yeah, 5 GMT, right? 6 o'clock our time. So yeah, I mean, so we did have the blip, right?
Yeah.
But again, yeah, we have to note that it came down to, was it 2 months in a row now?
No, it's the first month down.
The first month that we really
come. The last one was the big jump to the 4s from the 3s.
Yeah, was the jump. Yeah, so I think we have to wait for the next one as well, and by then Ueda is in the seat. Yeah, there's not really much more I can say about this. No. As we've seen inflation elsewhere, it's jumpy. And but perhaps the worry here in Japan, as I say, it may come off faster than elsewhere, just because of the companies not passing on full price hikes. Yeah,
exactly. And we still need to feel the effects of any of those wage hikes coming in, when they actually hit pay packets and the like. So that probably won't be seen until maybe the April, maybe May data, as far as inflation concerned.
We have to know that the Japanese citizen is a saver, right? So we have to see how much of the price, the wage hikes are going to go into the real economy, and that may take a couple of months, right?
Yeah, exactly. Well, speaking of the real economy, over in the UK, you can see the BRC, British Retail Commerce Shop Price Index there, rising to yet another record, 8.9% versus 8.4% prior. A separate study from Kantar, tracking UK grocery inflation, that hit a record as well of 17.5% in the 4 weeks to March 19th. So no let up in inflation in some of the heavy numbers, i.e. groceries. BOE's Bailey was out yesterday waffling on, saying we have to be very alert to any signs of persistent inflationary pressures. Well, I've just highlighted 2 of those for him. He says the path of inflation will not be entirely smooth and cost and price pressures remain elevated. It's too soon to say if UK credit conditions have tightened in recent weeks. Now, I had a quick look through his speech. There was 15 pages of it. I fell asleep after 5. But this comment I picked up from that, and he says, I am afraid that monetary policy cannot make the shocks to our national real income go away. But what monetary policy can and must do is to make sure that the inflation that has come to us from abroad does not become lasting inflation generated at home. So it's recognition from him, what I say all along, that we get a lot of imported inflation into the UK, and it's how much then feeds through into the domestic price scene. So he's highlighting that there, and also saying that they have not a lot of strength in combating imported inflation. That's the big fight that rates have absolutely nothing to do with and can't help whatsoever. At the moment, as we've just noted, that high shop inflation still continuing. That's going to be hitting people hard. That's the type of inflation they're going to want to get under control. And hence why I think they will continue hiking rates, but we shall see. Over to the ECB, and Germany Schnabel said, or was reported, that she pushed for the ECB statement to say that more hiking was possible. So that was the hawkish slant to that, to keep saying and keep the message going that they will continue hiking. On the Dove side, ECB Centeno says we haven't seen de-anchoring of inflation expectations. That's going to be important this week because we get the final consumer confidence numbers and economic sentiment, and those will contain consumer price expectations. But he says doesn't see any de-anchoring of those. Must be patient on the transmission of policy. We don't see signs of second round effects on wage settings, and amid global tightening, ECB can do more with less. Banking problems have to have an impact on our decisions. The size of the rate increment will depend on data, but it is clear we need to preserve stability. ECB's Muller, inflation is slowing, but too early to declare victory. Shouldn't fear bank woes spreading to the Eurozone. Try being a Deutsche Bank shareholder right now, although things are looking a bit better this morning. Fed's bar, we are prepared to use all our tools for any size institution as needed to keep the system safe. If in doubt, throw money at it is the answer in the US. Fed's Jefferson says they're still learning how much tight monetary policy has influenced the economy and inflation. Okay, Monday, maybe they'll be able to tell us. And the good old Fed swaps. Yes, on Friday, they priced out a hike for May. Now they're pricing in a hike for May. It really is pendulum swinging as far as rate expectations go for the next Fed meeting in May. And one thing for the post-it notes, apparently Biden is to speak about US manufacturing today, 1930 GMT. So if he remembers his own name, he might have some comments on why manufacturing is looking a bit sucky at the moment, though I doubt it. That's it from the headline front. Kay, you got anything in there? It's been a bit of a quiet one this morning.
Yeah, it's been a quiet one. There was some back and forth again between Saudis and things. Iraq, less oil production, sending the oil price up. But for the rest, yeah, little fat boy saying that he's nearly ready with his nukes. Yeah, the rest is very little market moving news. Let's put it that way.
Yeah.
Not that I've really picked up much more than this. The rest is negligible for what immediate market moves are concerned.
Yeah,
there is just this one thing going on between the US and Mexico on energy, which I don't really get why they are making an issue of it right now. But Biden went as far as saying, or some of his crew saying, went as far as saying that they might slap some kind of tariffs on Mexico. But it all seems to be a storm in a glass of water because the Mex barely reacted to it at all. And I was a bit surprised to see to read stuff like that. But yeah, it's been for the rest, it's been relatively quiet. And I think barring big declaration statements here or there, we know what central bankers are saying. I don't think there's big shocks to be expected. Got a little bit of data out, but we're really entering end of month and end of quarter territory, right? And then the fiscal year end in Japan, and I guess we should or have to concentrate a little more on that right now.
Yeah.
Yeah, we've seen some models coming up, ranging from not a lot to do to some to do, but mainly on the asset side, bond side of things, than really equity markets divergences. And it really coincides with what I thought as well, because if you look at the equity moves year to date on the S&P, for instance, which is the biggest point of measurement to see what's going on. We've seen a very this month has been quiet. The year to date has merely seen a 3% or so move. So there might not be too much to hedge into end of the quarter either over there. But against that, we've seen big swings in bond markets, and books have been swayed from one end of the boat to the other virtually overnight a good few times, and there may be a bit of rebalancing to be done. And if I can then straight away picking on a question that Michael, our Australian friend, had when I was updating in the room about hourly fixings. I mean, yeah, we have to know that there's many different companies, funds, asset managers, even nationals, the wealth management and stuff. They have to do some rebalancing because a lot of them are working on FX neutral books, which means that if you are an outsider and you have for instance S&P in the books, you will need to manage it, and intra Europe as well, the European continent as a whole, we can see those kind of moves starting to appear in the last week of the month and the quarter. And I've got the slight impression that looking at what happened on the morning hours today is already a little bit of a sign of what may happen or what's to come or what is being done right now, because we've seen Euro Sterling moving higher, Euro Swiss moving higher. The European crosses seem to be in a little bit of demand. That does not mean that at the end of the week we are going to see the same moves, but some of those moves can be done nearly every hour in the European mornings, especially. So that replying to what Michael was saying, and then what's happening on the real end of month, end of quarter will start to appear tomorrow. Tomorrow we're trading value date end of month. And then every 4 p.m. London fixing especially is going to be scrutinized and need to be monitored quite closely to see if any of those rebalancing flows takes the market out of sync with what is really going on, and could provide some opportunities.
Yeah, and it's always worth watching that the fix is at 4 o'clock, which is now BST, so 1500 GMT. It's always worth keeping an eye out from the 30 minutes before, because we can see a lot of moves happening just as the clock strikes past, and then there's stuff done, and then we run into the fix, and then more stuff's done up there. I think maybe if the markets stay fairly quiet on the headline front, we may get a good bit of insight into the end of month stuff going on. It may be a bit more apparent. If this was end of month, come in the middle, the Credit Suisse stuff and all that, we probably wouldn't even notice it unless it would really stand out. But as we're hitting maybe a little bit of a quiet pocket, the flows may stand out a bit more. So say keep an eye on those fixed times. You've got the Eurozone fix, which is at 1300 European time. Is it Kay? The ECB fix?
Yeah, the old ECB fix was at
13:15 or something, wasn't it?
Yeah, quarter past. Yeah, we have seen in the past moves around there. So that those are times to monitor. Yeah, and it like Euro Swiss, for instance, went up pretty hefty, 60-70 points from the lows, and we did what, around 40 or 50 already this morning, no?
Yeah.
So, yeah, I think we can assume that there's some interest there.
Yeah. Well, we've had note, as you say, from Citi, saying that their preliminary estimate points to moderate USD selling against all major currencies except the euro. So they're potentially wrong on that one already. But there you go. These models always come out, and we have those obviously in our chat room from several banks. So keep an eye on those. Price wise, this week I'm probably not doing an awful lot. I'm heading off for a bit of a break on Thursday, so I'm not looking to get into too much. Euro dollar has continued its bounce from down near 107. I'm going to call that a confirmation still of the break point holding down at 107. You know, since we had this latest move up after we tested near 105s, we got up, had the run up to the highs. We've come down. We've held that on Friday. We're continuing to climb higher. We're now trying to mess around again with the 30-70 zone that I have here, which is always a traffic area. So keep an eye on that level there. We've had a little go at getting back into it, but can't for now. Again, watch those fixed numbers. It's going to need to take out these highs if we want to have a real move up. You know, if we come up to sort of maybe 108.70, maybe 109 and run out of steam there, then potentially we're going to head back down lower again. We will be then building a series of lower highs, which is never good if you want a price to go up. But overall, again, we may also be setting up for a similar 107, 105 range play, 107, maybe 109s, 109s 40 up here. So we'll see if we start to have another look up here, and if it holds around here, you know, that will indicate that we are perhaps building a bit of a range, and then will give us plenty of opportunity to trade in between the levels for that one. Dollar yen, it bounced from that move last week on Friday down into the 129s. Got above my zone here up to the 70s, then we came down, and this 130.50 has shown up again. It showed up before we had the move lower a couple of times, then we went below it, then it tried holding, then we got back above, and it's held and it's held and it's held. So this 130.50 is a bit of an on-off level, but if things aren't crap in the bed or anything majorly happening, then this level looks to be one that we need to respect and keep an eye on. And yet again, we're up testing this zone again. We are, again, the downtrend is pretty clear throughout this since that bounce to the 138s. And again, we keep making a series of lower highs, which keeps this bearish pressure in play. If we fail around here, then I would rule out a test of these lows and maybe even making a newer low below that. The only time I would consider this is looking like breaking is if perhaps we come down a bit further, but don't take out this low, build a slightly higher high, and then we get a series of those, so we get a small uptrend forming. And if we start taking out some of these highs, then we can say that perhaps, you know, we're possibly heading back up to the 134s, 133s, that sort of area, and see what happens then. But in the meantime, I don't see any reason for this bearish trend to change. I'm still holding out perhaps for a move to 128s, 127s for a little long play, just playing the bottom end of this recent range and down towards the support here. You got any further thoughts on euro dollar or dollar yen at the moment, or are you still in the same boat, just watching and waiting?
Yeah, I can imagine that. I could imagine that the euro pushes a little higher, but I don't know whether it's going to be this week or next week, because we had this lower confirmation, because there's less pressure, because interest rates differentials are stabilizing. I don't know. I've got this feeling the euro may retest that 109 zone, but I don't know. It's all going to be a bit of a random. If we don't know what the real flows are for the end of month, it could get a little bit random. I have the impression that for the end of month, end of quarter, we may see actually a bit of euro selling, but that's just based on equity markets this quarter. And if I get it, then I may try to pick some up there in somewhere low 107s or even mid 107s if we wouldn't get down there. But for the time being, we're rather sitting at the opposite end. It looks bit into the hours this morning. So that's for the euro. And for the yen, I'm as I was saying, was it on the flow through yesterday? I was saying that I'm starting to have the impression that the longer it takes for Ueda to use this window, and we've seen it then on that inflation number, the faster it may close. And I'm going to be very, very, very closely monitoring any more move down below 130, but in the wider sense of the term, below 130 could also be 127. I just want to see what's happening. So the first indication would be back below that 129.5 or so, but then see if, down to where it can really go. But I'm starting to think we may be close to the end of this move. But it's really a thought. I haven't made any specific plans yet to really start to dive in, but it's going to be a very, very interesting monitoring, I think, in the upcoming weeks for the dollar yen and perhaps some other yen pairs.
Yeah, definitely. Euro sterling is one I'm keeping an eye on as well. Not doing an awful lot at the moment. Haven't done an awful lot for a while, actually. This move up may have broken this short-term downtrend. I did think this morning when I came in and saw it coming down to the 70s that maybe we're heading down towards the lows here. Whether this is end of month stuff coming into it, as Kay's mentioned, I don't know, but we got a bounce in that one. 88, 20, 30 up to this level is the near-term resistance on this move up, and then back up to that 88, 60 area. I will possibly be looking to play this range again. I'm still long, still holding longs. I may, if we get up to 89, something like that, I may even go for a separate short, and just to play the tops up here, while keeping my core long position. I'm still looking to see if we get another move down here, and if it holds, I'll add to my longs for a bit of a short-term play and fold some into the core trade as well. Otherwise, lots of sideways action in this one. Pretty tight ranges for now between the 87 and 89, and we're pretty much give or take in the middle of it around here. On the risk front, I'm keeping an eye on dollar mix as well, because it is pricing out all this banking stuff. It was one of the currencies that really took off over everything that was going off with the banks and stuff. As you can see, we had the break below 18, and then we just ripped higher, and we kept making these highs over all the banking news. But this is still, I think, a really good risk pair at the moment. It's showing you really what the market's thinking about risk in this one. Could be heading all the way back down to 18s again. Do you think people are just a bit more shaken about getting back into this one, Kay? I mean, obviously it's had a big move off the top, but it's not, really tumbling again back towards these 18 lows, is it?
It's not tumbling, but in the meantime, we are nearly 5% lower from the highs, right? I mean, it's a pretty big move. There's been a couple of things happening over the past month, and first of all, the banking crisis. Then well, let's name it a crisis, and not to try to search for too many other words, but sorry about it. So you got the SVB thing, which of course, and we saw it. Mix is very much linked to what's happening in the US, because they're so tied together due to the USMCA deal, due to Mexico being one of the US manufacturers. So whenever something really happens, people get out of carry trades, because carry trade is typically a risk positive trade, right? You get into the high yield currency and you sell the low yield currency, and you just hope for the economy not to falter, because the EM is emerging markets are always currencies that suffer the most when the economy really turns lower. So the people went out of it. We even saw the people moving out of the ZAR mix, which we mentioned a couple of weeks back. But then I think it's just a case of I wouldn't say the biggest players, but those who are relatively relaxed about their positions. They just went back into it, in my opinion, because we're seeing the ZAR mix move mostly undone, the dollar mix move mostly undone, or the biggest chunk of it at least. So yeah, that testifies that the market is relatively relaxed on the risk front. And we can't forget that Mexico, the Mexican peso is an 11% currency, and this week we have Mexico, and they're probably going to add 0.25% to it. Which, by the way, and I will talk about it. I think it's on Thursday. I need to make a reminder of it, but I think this one may be their last one. But still, if you're looking at the euro, which is what, 3%, and then you look at MEX is 11%. You look at the yen, which is still 0.5%. It's tough to be short MEX for a longer period, because thanks, Michael. The funding is biting really rapidly, and as long as there's no bigger issues, let's put it that way, in the US, because the mix also strengthened on the back of the end of last week, those US data jumping again.
Yeah,
that was the day that the mix actually gained the most, and there you see what I always like to and I always keep an eye on that, like trading the American continent versus the rest, because you have this USMCA deal, and MEX is very much a barometer for the wellness or the risk on the US continent. So yeah, and I think that's why the mix has gained back some of its strength. Bit undecided here, I think.
sorry, mate.
I say a bit undecided here.
Yeah.
40 is a level, right? 1840 has always been a level. We're hovering just below, but not really falling out of bed. So I think it's a case of waiting, perhaps even letting the Banxico and the end of quarter go by, and then make a decision on it.
Yeah, definitely. $1 is obviously one we keep an eye on quite a lot, and again, this one's really not doing anything. We had that move last week down there, didn't quite get down to the 79.80s. I was looking at for a potential jumping into a bit of a long, and then we're just back in the malaise at the moment. Coming in here. Let's get my right chart up. It might be a bit easier. Here we go. So we're still finding this 691 a bit of a pivot level. That's sort of the gateway to a move up towards the sevens, and below there, as I say, down to this next level, 678, 680, that sort of area. So well within range. I still would rather play this one from the long side down here, if we're not going to get a move up to this 7. But we're sitting pretty much bang in the middle. So I'm looking for a move either way. But this is, again, indicative that the market isn't really sure what it wants to do at the moment. This one doesn't tend to stay in too tight a range for too long. It likes to make a move now and again. So it could be that the spring is coiling for a move somewhere outside these areas here, but we'll keep an eye on that one as well. Also, obviously, monitoring the yield front to see what's going on over there. Looking a bit better on yields, though. We're still, for something like the 2 years, holding well below our former watch zone, if you want to call it that. This was where the market, where we sort of pinned the market should be pricing in rates. We're still massively below that, still massively below the Fed midpoint, the current Fed rates level. So the market not yet ready to get back into at least Fed rates going up and staying up for long. So we've still got a bit of a mismatch going on here. But if this banking stuff subsides, if the data doesn't crater, and we got the jobs report next week as well, the NFP report next week, if that comes in another strong reading, it's gonna wash out a bit of the risk off as far as the US is concerned and the economic worries over there. We'll go back to probably soft landing, no landing type scenario. That should mean that we see yields creeping back up towards the recent levels that we've seen there. But for now, a bit of a mismatch. And if those go, so will the dollar follow probably. Lastly, before I let Kay have a look around, oil's had a little bit of a move up. We've got this zone that I've been watching for a while that was in the range play between this 82.50 and down here at the 72s. We're just getting through that zone again now. If we get above there and build a bit of support on this zone, and we might be doing that already just from this little move here, but get above there and we get decent confirmation, then it could be that we're having another move up towards the 80s, and maybe even another move up to that 82.50. But I feel it's going to take some very good news or any other news to send this much higher. I still don't think oil is really following the fundamentals all that closely. More so probably the geopolitics of everything going on at the moment. But as I say, keep an eye on this one moving up back above this support zone here, because it could mean it builds for a further move up. Okay, man, do you want to have a quick look around?
Yeah, sure, mate. Sure. Yeah, I mean, just on your you were showing the 2 years there in the oh, I'm not sharing.
Do you want me to take it back, or you want to?
No, I've got it. I've got it. No, I thought I was sharing, but I wasn't. Keep an eye on this in the 2 year. This little zone here, 404, 408. Low here in February. Okay, then we crashed below, of course, on the banking situation. But then we retested it, and we are at the time we are now just turning around 4%, and this little zone here, 404, 408, rounded up to 410 perhaps. This is to me a little interesting one going forward, because if it gets back above, it may push the dollar just that little bit higher. It's just a yo-yo, right? On the differentials between in the short end between euro and the dollar, but we are in a traffic zone where we were before. We had this one before, and then once we moved out of it, we had this spike. This is the 110 in the euro dollar, and then we went back down. This is then the 109, and then we went back down, and this is what we saw, the 10 closer to 107 again. But we are hanging around this differential zone, and I think this could be a little bit interesting if we get back below 150 BP wider. I mean, than 150 BPs, or we starting to narrow more better than 130 to 125 BP. So keep an eye on those short euro and dollar differences. They may be a decider come April, once the quarter is over.
Can you just give us a reminder what those mean for
Sure.
trading?
Well, what those mean for trading is that you keep an eye on that. For instance, so you can basically overlay the inverted. This is the inversion of euro dollar, really, because this is what a lot of models use to measure the difference in yields between the short end of the euro and the 2 year dollar yields, which are the ones that are mostly used to judge what the Fed may be up to with their interest rates. So because they include a bit of funding, they include a bit of decision on where the Fed may be, and already a little bit of expectations of where inflation may go, and the outlook for the economy in the shorter term. So that's why a lot of models are, and before the models, the fund managers, they were using this dollar 2-year. So if you take the differential between the EU 2-year yields and the dollar 2-year yields, and you overlay it with the euro dollar, you will see that, which is going to be model driven, you will see that the euro dollar is actually moving pretty close to what they are. Give and take the how shall I say it, the panic moves, right? Because we have seen such big swings, and not only in the 2 years, but for instance, when we were trading around 440 on the 15th of March, come the 24th of March, in the heat of the or when there was the most uncertainty, this thing was trading 95 BPs lower, which is enormous. 85 BPs lower. This is enormous. And on the 10-year, some people don't realize what those moves mean, but there's trillions of dollars in those books, and only if you look at Japan. I'm not sure how much Japan has in US treasuries and US bonds, but I think it's close to, is it
they're the top, they're the biggest
trillion,
total.
or yeah, 1.1 or so trillion dollars.
Yeah.
So you can imagine when the 10-year dollar yields moved from 370 down to 330, what it does to Japanese books, right? And what it does with their bond holdings, what it does with their foreign investments. It's those are serious moves. We already talked about it, but it's quite useful, I think, to remind it, and it actually may play a part towards the end of the week, when we are going to see the full effect of what the Japanese pension funds, or the Japanese whales, the big investors, have to do with their holdings to close the fiscal year. So that for a little bit of a tour on the yield front. Gold is trying to make up its mind. We are here. We will have respected this trend line quite a bit. Now we are back below, but then you see we have from the past top over the next top, we have this little trend line coming in. I think anywhere between 1940 and 1960, we're relatively neutral. And then we'll have to see. Actually, when we talk about end of month and end of quarter stuff, we have seen metals, oil move at the end of months and quarters as well. So don't be surprised to see a little bit of moves coming out of there without news, because that may be that there's a bit of hedging to do as well. So keep an eye on those as well this week. But I'd say points of measurements will probably be 2730. If that goes, then we likely will see 1900 again. But if we start to move back up above 1960 with a bit of an intermediate station around 19.75, then we may see a move back up to the 2K, and it's not very visible, but it's the 127 extension as well of this move lower earlier this year. So that for gold, silver, pretty much the same, but yeah, hearing talking of people talking about head and shoulders. So if it goes below where we are now, actually, I don't know, we bounced a little bit. We're back above 90. So these people are looking at a little bit of a head and shoulder here. If this breaks below 2083, we can see a move back lower as well. Could be technical, could also be that there's less stress in the system for now. We wait a little bit for the end of the month and see what happens. Anyway, I'm still waiting to see if we get moves back down in this zone to reload what I let go on the way up. And if nothing happens, or if it pays up for the end of the month, I'll see what I have to do. But really, the big zone is going to be here. The red line is now around 2390, and then those prior tops, if those go, it's we're off to the races, I think. Quick one on the cable. Yesterday, I was watching this 60-70 zone. broke up but failed to even get to the prior highs. I thought we'd have a chance to get there. I still actually think we could by the end of the week. I'll be monitoring this 122.60-70, but keeping an eye on rather the clock than really levels right now. But if we see a dip here, especially into tomorrow, see what happens tomorrow on the value data end of month. Trying to perhaps pick some up here. I'll see what there is to do. And for the rest, as Ryan already said, dollar yen 30.5 showing up here. It's also a trend line coming up, and then the top end of the channel. Yesterday we tried to move up, but the second resistance line capped it again. So I think we're basically in a range and waiting to see what the Japanese have to do for their end of fiscal year, and that will then decide what there is to be done once Ueda takes office. And again, as I've said, I think I need to move out a little bit further. This zone here is going to be determining for what happens in the medium term in the dollar yen. So that's the prior low, and we held on 50%, the 50% of the absolute low before we started to rise again. Is just below there, and I think this is the big decision zone on the dollar yen. Put a gun to my head, I'm going to buy it down there, but still a lot of water to flow under bridges until then. Dollar CAD. Dollar CAD is fooling around with this bottom end of the wedge and 38.2. It held again twice already, so this level is now pretty well reinforced. The first resistance here around 136.90 was enough for the morning. Above there, we're looking at 137.20 now. So respect the range for as long as the range is there. Worth noting that we are seeing decent bounces from this 38.2, despite the rise in oils. Okay, so this level is seeing some importance for the time being. Another one which held its short-term triangle here is that Aussie tried for literally 2 sessions to break through this trend line, and finally decided it was going to hold, and then helped with its the better retail sales and a bit weaker dollar elsewhere. We had this little jump up, but for as long as it's below 67.0510, I think we're just trading ranges in this. Yeah, as I was showing, always looking at this dollar rand, but it's a bit looks a bit like the dollar Canada on this support here. Also, the low 18s are really showing up in this. I think I should put these a little bit lower here. So the low 18s are really showing up. This is really very good support. Top side 43, 45, 50. Looking where we are now, I've got the impression we are going to stay inside the range until possibly the end of the month. Yeah, dollar MEX, as I was saying, it's below the trend line here. It's below the 61.8. We're holding below, but we are not yet pushing down to where the support comes in from a little bit further away. So I'm not inclined to do much, but if some models are correct on what's happening to dollars, wouldn't be surprised if we are going to test a bit lower before the month is over. Right, anything else that people would like to see before we close shop for today? Copper, Michael, don't do that to me. I'm never watching copper. Are you? Well, I mean, I'm watching it just because It's an Aussie driver, but I've never charted it, mate. Ryan, do you wanna do this, or do you want me to have a look at it?
You've probably got as much tech, if not more, on the copper than I have.
I've got nothing on
Let's
top.
see your copper chart. Have you even got one in there? Oh, you're not even one in your watch list.
No,
No.
I'm just watching it from a distance, mate. Look, it's empty. Thanks, Michael.
Stalking it for a short.
Well, then you have to wait until it breaks 405, yeah. If you want to look for a short, I guess that's where your this in the simplest of views, that's where your support comes in. Could be if it goes back inside, could still be developing a bullish flag here, right? Let me see if there's anything. Look me that. Yeah, we're on a bit of support here, but then I'd still say watch for this 405.5 to confirm for it to go down again. If it comes back into this channel or flag, there may be a bit of ways to go back to the 50% at 374, but we'll have to watch what goes on. I'm not sure whether we are going to have like end of month or quarter stuff in there as well. I could imagine that some of the bigger traders may have some stuff to close end of month, end of quarter as well. But yeah, I mean, it's already a decent support around here.
What levels are you looking at, Michael? Let us know what you're looking at. You know, you could maybe draw a bit of a horizontal off the 14 the 415, 417, those last couple of highs that we've seen. If you don't want to wait for the break, but you're waiting for a macro catalyst, for it to rally to sell into, I assume. If that's the case, where you looking for it to go to get into a short? Let us know your levels as well. Anyone else for anything else?
In the meantime, I'm keeping an eye on this one, Eurocat, because it's for as long as it's holding this 147.25, it still looks breaky to me. And again, this one has held pretty well despite the oil rebound. So I guess this 147.25 will show up if we get a retest there. If ever we get back below, then we have to respect this one again, right? The 146, 40, where we had many battles in the past, as you can see, many battles in the past. It also took 1, 2, 3, 4, the fifth attempt to break above, which was rejected on some of the banking issues showing up. But then in the meantime, we're back above. So 147.25, 146, 40, 50 on the downside should be decent levels to watch. And if those really hold and we can get a foothold again above this 148 again, why not dream about this one? And that's going to come in high 150s. And if oil fails to support the Canada, I wonder what's going to happen if oil comes back down. And I think that could be the catalyzer for this one to try higher ground again. So that's it for me, really. Capital markets in 12,000 ranges present. Sure, Brian, can you take the Brian question?
I was like, who's going to take that one?
I'm Brian, sorry, I don't want to be funny, but I'm trying to understand the question.
Honestly, Brian, I don't know. I don't even know what that is. Foreign capital markets.
Foreign capital markets, dollar index. Oh, I see where Brian is coming from. There's a lot of talk about outside of the US dollar liquidity and possible issues that they may arise from tightening of financial conditions. And is that what you're hinting at, Brian? So there may arise a bit of an issue in foreign dollar funding or liquidity. And well, I mean, it's really going to depend whether there is an issue or not. If the issue is there, then this index should probably go down. Oh, I don't know. I don't know. Well, I don't know the description or technicity of the index. I don't know.
Yeah, I don't. Is that the global index? I know there's tons of them. So I'm not sure what one that relates to. But we can have a look at if it's a blended index. I don't know. We'd have to look up the composition of it, mate.
I don't know either. No. Last one quick then on the dollar China. It's went out of the triangle, went down, back in it, and now we are just at the end. I'm a little surprised that the Chinese yuan has not followed any of the dollar move back lower that we saw in other instruments, especially that China is really trying to get involved with everybody in funding programs and bailouts and everything. It still seems to me that the market is very reluctant to hold Chinese yuan in the books right now. So this is another one where I think it's going to get interesting once we start April. This one. Okay, back to you, Ryan. I'm done for today.
No problem, mate. Thank you very much. So yeah, just to reiterate, if we're going to be short of big headlines today, keep an eye on the data that's coming out later. We got some, as mentioned, got the consumer confidence numbers coming today. Is it today? Where are we? Yep, there we go. Consumer confidence. There, keep an eye on those inflation expectations as well when they drop. Also got some home price index data from the F.A.C.E and Case-Shiller. So just see if there is tightening of conditions coming in. Something like house prices is where you're going to see it start biting. Although this data is for January, so it's coming well. You know, it's a bit lagging since we're just finishing off March. But that's where you're going to see the impact coming in pretty heavily if there are tightening conditions. You're going to see prices dropping because housing activity will start to falter. But keep an eye on the weekly MBA. That gives us an early indication. That we'll get that tomorrow as well. So apart from that, trade safe. Thank you for coming to the Flow Show, and we shall see you all bright and breezy tomorrow. Thank you very much, boys and girls. Cheers, Kate.
Cheers, everybody.